Hey guys, so today I'm going to be talking about a few stocks that I feel are very undervalued right now, and that's as a result of the SPY selling off in the last week. As you can see here, the market as a whole was around $293, and in my previous video I said that if the market got above 290, then recession concerns were basically out of the window. And I mean, it's kind of true, but I feel that we still could have another pullback like what we've seen this week. So as you see here, it went from 292 to around 278. And now we're recovering a little bit. We're around 280. However, I still wouldn't say that we are out of the clear here or like out of the bad situation, as this news was caused by the Fed meeting today and what Jerome Powell said. Essentially, he said that he's not even considering negative interest rates and zero interest rates is the most he'll go. Additionally, he said that he feels that the market downturn will be for the long run and that a lot of the things that we've been seeing have shown that the market hasn't recovered yet, and instead, a lot of people are just pushing up these stocks for no real reason. However, you can see here that once the market hit this critical level of 279, people started to realize like, hey, we might have oversold a little bit. And I know a lot of traders on YouTube that say every action has an equal and opposite reaction. So I feel that once we've hit this bottom, now we're going to start seeing a lot of upside for the next week or so. And so I want to show you guys a couple stocks that I think are very undervalued at the moment and that are probably going to be profiting within the next week or so. Now, American Airlines is a stock that I've talked about once or twice already. And when I talked about them, they were worth around $10. And you can see that they ran up here all the way to 17 and then all the way to 13 again as a result of the Warren Buffett conference that was happening last Friday. However, they've crashed since then because Warren Buffett actually announced that he was selling his complete position in the company. However, this doesn't show that the company is really negative or bad, it just shows that at the moment he doesn't have a lot of confidence in their recovery. And what I want to say is that after this market sell off, the company fell all the way to around 890. As you can see here on the 1 day chart, or the 1 week, I mean, they did fall all the way to 887. So that would have been a great time to buy because there's no way that this company could be less than $8.80. Like, this is like a base value for what they're worth. And even around the coronavirus recession time, like when the first drop happened, they never fell below $9. So this kind of shows you that investors are very wary of the fact that $9 is the bottom price for this stock. So at this moment, I would say if you buy in, now I do have about 100 or 200 shares of this company on another account on Tastyworks. And what I would say is that they have been gaining a lot of money in the last week. However, after this crash, they are losing a little bit, but I'm still going to hold on to them because I'm sure that the stock can push up to over $11 in around the next month or so. Now, the next company that I'm going to be talking about is FedEx. And I'm honestly always bullish on FedEx. I like them a lot more than UPS because they're just not government owned. So they're a for profit company and it's just very strong. It's much stronger than UPS and other companies like this. And as you may know, Amazon has been hitting the shipping business very hard. However, UPS is a company that has been able to recover through all of this, and their price was pushing up a lot before the coronavirus. As you can see, they were worth around $165 before the crash. And now, after the crash, they dropped to 93 and have recovered all the way to 120, 130 about 3 or 4 times now. So that's why when I saw them drop to around 112 yesterday, I came in immediately on the market. And as you can see, the calls that I bought for 125, which is the high of like I said, the high that it's been coming to every single time. Even if these hit the 120 level, because I bought them so cheap, I'll be profiting around $200 or $300 just on this one call option. And essentially, so what does this mean? A call option is that I think the stock is going to go up to this certain strike price. And depending on how close or how likely this is to happen, the price of the option will go up or down. So as you can see, when it fell today from 112 to 109, the stock's value, the call option went around $2 down, and this is really nothing for a $3 drop. So what this shows is that a lot of people are holding on to their contracts and they're still very, very bullish on what could happen to FedEx in the near future. Additionally, I have a lot of time on this contract, about a month of time. So there's little to no odds that the market isn't going to recover in about a month time unless we see another type of coronavirus type drop, which is unlikely to happen because a lot of world markets are starting to open up now. As you know, as you may know, a lot of soccer leagues in Europe, such as the Bundesliga, the Premier League, and La Liga, are opening up now. So what this shows is that a lot of people are eager to start coming out and coming out of their houses now and start returning to that economic activity that we're so used to seeing. Additionally, in the US, UFC has opened again, and this is showing that a lot of people are ready to start this transition into opening. And also, FedEx had really strong earnings in quarter three. You can see that they hit on the mark, and June 30th is their next date. So I bought my contracts for around June 5th, so I might be able to take part of this earnings run up. However, I'm not too sure because it's going to be around 25 days before, so that is a little bit out of time, but I couldn't afford any more time on the contract. I just wanted to make my money as soon as possible. Additionally, we have here Home Depot. And Home Depot is a company that has basically recovered from the coronavirus crash. And this is good and bad at the same time. Because the good news is that a lot of people have been doing home improvements, and this valuation is deserved by the company. However, the company does have earnings coming up in around 6 days here, and a lot of people are saying that the positive price action that we'll see on the earnings is already priced in. As you can see here in the last month, Home Depot has gained over $30 of their valuation, which is actually a lot of money. And they went all the way up to 248. It can't be shown here, but they did go all the way up to that price in one day. And essentially, what this means for the company is that they don't have a lot more room to grow unless a lot of more consumers come into the market. And with strong competition coming from Lowe's and other retailers, I feel that Home Depot couldn't really have a much higher price level. However, I do see them reaching the 250 price level if earnings hit substantially above what is expected. Like I said, a lot of people feel that the earnings move has already been priced in, and even if they have strong earnings, the market will already be expecting it, so the stock might not increase in value as much as people are expecting. However, if they do hit high above their earnings, then this company could still run another 15 to $20 as a result of how many new people are doing home improvement services and using companies such as Home Depot and Lowe's. Now, as you can see here before the crash, they were worth around 250, like I said, and after the crash, they were worth 150. So if you did buy them at 150, that was a really strong price. However, I don't believe they'll ever fall to that price again. Like I said, they're showing really strong signs of recovery. However, I do feel that this company could pull back all the way to the 220 level. As you can see here, that was how much they dipped on May 6th, which was only a couple days ago. And even though this company continues to go up, I feel that if the market does sell off for even a day or two more, then this company could stand to drop another $10. And if you do get it for around the 220, 225 price range, then you're bound to make money if you hold it through earnings because, like I said, this is a really strong company and they're not going to report under their earnings amount. And a lot of people are actually expecting this company to do really well. Like I said, you can see here that the options for after earning May 22nd are gaining a lot of value and they're worth around $600. Now today the stock did drop, so some of these options did lose money. However, you can see that the puts didn't gain as much as the other ones won. So these calls lost $200, but the puts did not gain $200, which basically shows that a lot of people are very wary of buying into these puts and instead are deciding to hold on to the calls because they know that if the market does recover any amount, that Home Depot will be ready to gain a lot. And as you can see here, just three more contracts that I'm holding right now, they'll pop up here on the side. So Starbucks is a company that should be worth around $80 in my opinion, and right now they're around 73 as a result of this drop that happened, like I said, in the last week or so. FedEx, like I said, I'm holding it as well, and the 125 call today got me 25% extra money. And additionally, Bank of America, now they did sell off a lot as a result of the news that there was going to be no negative interest rates because these negative interest rates really do benefit the banks a lot. However, I've been very bearish on Bank of America in the past, but now I feel like their price level is very strong. So I bought four of the call option for around $25. And essentially what I expect is that they're going to rise to around $23, $24 in the next month or so. Like I said, most of the contracts I bought were for around June 5th. So once they do show up with this strong price level of around $22, $23, then I'm set to gain over 100 on this contracts because the value of them, I bought them for 40. However, they should be worth around 50. Oh no, sorry, the total value is 40. I think I bought them for around $20 each. So if they do go back to that $50 price value, or if they come in the money, then they would be substantially worth more. As you can see, the in the money contracts here for around a month of time, so for June 5th, are worth $110. So if these contracts do jump from around $20 price to 110 and I'm holding 4 of them, then I stand to make around $200. So yeah, I'm very bullish on Bank of America at this price because I feel that banks is one of the things that people really have to rely on during these weak economic times. And a lot of people would rather put their money in a bank and make sure that it's safe than continue holding it, or they don't really have a lot, so they just keep it in the bank. So yeah, I feel that Bank of America has a lot to gain from this price. And that wraps up the list of all the stocks that I think are going to do well in the next month here or so. So, yeah, good luck, guys, and I hope you guys can profit off these moves.